The Toronto Regional Real Estate Board just released data for the months of June showing a real estate market that is slowing down with prices falling throughout the month. This comes after the Bank of Canada announced that it would be raising rates at the beginning of June. Lots of predictions out there expecting the market to cool off this summer in the GTA, with some even mentioning that the market is incredibly fragile. The June's data appears to validate this out, with prices reversing considerably despite the trap saying a persistent lack of inventory led to tighter market conditions. However, it's not precisely clear yet that the tighter supply will stop the reversal in prices. Looking at the GTA residential market June numbers, the benchmark price, which represents the prices of properties with the most popular set of features, was $1.1 million, a 0.6% increase from the May number, or about $7,000. The average price was $1.1 million, a 1.2% decrease from the May number, close to $14,000. The median price, which represents half of properties selling over or under this number, was around $1 million, a 2.4% decrease from the May number, close to $25,000. And some can argue that the current market slowdown is trying to find an equilibrium level to reinforce the 12.4% average price increase we saw since the beginning of the year. If we look at the months of inventory metric, which measures if no more homes came to market, if everyone stopped selling their homes in Toronto, how long would it take for Toronto to run out of homes for sale? In June, the MOI dropped to 2.1 months, indicating that if everyone stopped listing their properties for sale, it will take Toronto 63 days to run out of inventory. Although the MOI dropped, we also saw the sale to listing price ratio also go down. The sale to listing price ratio, SLPR, which measures by how much over or under asking a home sells, dropped by 1% from May to 104%. This means that in June, on average, homes sold 4% over asking. Judging from the data in June, this is a real estate market that is showing signs of slowdown. That being said, these price decreases make more sense when we look at the number of new listings coming to market. In May, the number of new listings coming to market was around 15,000, with 11,900 active listings available at the end of the month. Fast forward to June, the number of new listings coming to market was 11,800, with 14,100 active listings remaining at the end of June. That is a significant amount of listings that are unsold, around 2,200 properties. With more people on vacation spending time with their kids and less people want to buy houses during the summer, it might appear at first glance that this market slowdown is normal. However, what's not normal is the major increase in active listings between May and June. The change in active listings between May and June 2022 was up by 600 listings, and 2021 was down by around 950 listings. And in 2019, it was down by around 360 listings. After excluding the exceptional year of 2020 from our observation, we see a consistent pattern for the 3 years where the change in active listings between May and June has only been attributed to marginal increases or decreases in number of active listings. Unlike what we saw this year right after the Bank of Canada announced another June rate hike. We are now in a situation where a number of new listings are coming to market, with over 2,200 new listings coming to the market in June, marking a significant shift in the June market supply activity when compared to the previous years. Even though we don't have a clear indication for a market rebound to the highs of early 2022 price points, the substantial increase in new listings combined with higher interest rates will likely continue to put downward pressure on prices and slow down the market. Our attention remains on property inventory and this Wednesday's interest rate announcements from the Bank of Canada that will determine the trajectory of the market. Feel free to drop me a message to learn more about buying, selling, and investing in the GTA. Bye for now.